Is this just a normal required adjustment needed to attract capital to finance a big fiscal package through a weaker currency and high yields? Or is it something bigger than that, something worse? Do we have the ingredients required to have that self-fulfilling downward spiral?
I think it's something worse, unfortunately. I don't want it to be worse. This is the country I earn my money in. I'm long sterling, naturally, from my salary. But we've just put out a piece just before this. I came on live on air. We've now revised lower our sterling view. We were looking for 106 by year end. As you know, we've gone through that rapidly quicker than I expected as well. So now we've adjusted our view. It seems like the market is focusing more on the terms of trade deficit that the UK has when it comes to the current account. But there's a terms of trade story with high energy prices and UK imports skyrocketing. So now we're looking for 97.50 in cable by year end. So that is unfortunately below parity. And I've been kind of toying whether to make that call sooner. And the reason I didn't was I thought markets would be concerned about the Bank of England raising rates, and that would support the sterling. But now we've switched to an emerging market style crisis where it's become very clear that even with rising interest rates in the UK, it's becoming less attractive to investors as this crisis goes on. And therefore, I think we break through parity in cable before Christmas, probably by the end of November, and we get down to 95. So the end of March next year. That's if nothing is done about this supply side crisis in Europe and if we have high energy prices continue. I could be wrong, though.
Yeah.
I could be wrong if three things happen. The first one is if we have the Bank of England raise rates. Now, we're expecting them to step in with some sort of warning in the market. Ed Conway from Sky was suggesting that might happen today. If they don't raise rates, there's about 80 basis points priced this week. So if they don't raise rates this week, sterling will probably take another hit. But the main thing is on the government side. It's not really the Bank of England that's being challenged here. It's because we're not having a fiscal policy with fiscal rules tethering market expectations to a sort of sustainable fiscal spend. And because of the government doubling down over the weekend saying there's more tax cuts to come, it's why we expect more of these sort of moves to come too.